Alright, in the video I created yesterday, I guess I wasn't specific on some stuff. So people were talking about, because of the low growth of the U.S. economy and the election and the overall pretty pricey area of the market right now, they were talking about shorting the market. And I said, definitely not to, that it's not near breaking this yet. And you need to wait till it breaks this line to short it. And even though it is second most pricey in history, I would not be shorting this right now. So, when's the time to short markets? Well, you have the uptrend, it hasn't broken it, bounces, it breaks. You do not short it as soon as it breaks. You wait till it drops, it will come up, retest the uptrend line that was set years ago. Once it retests it, once it touches that, that's when you short. That's when the massive downtrend will start. That's the 2000, 2001. Let's go to 2008, 2009. Keeps hitting this, kept going up. You wouldn't short it anywhere in here because you don't know it could keep going. You wouldn't short it here, boom, breaks it. You wait till it retouches the line. Look at that, exact same thing that happened in 2000. This is when you short it, and this is when the drop you'll see. You can short it up here, but you don't know if it's going to keep going. So you better wait till it breaks it. Let's pull up another example, GDX. Just saw this play out. Okay, we have the uptrend line. We tested it. We broke it. The time to short it would have been when to wait. It would come back up, retest the line. This right here would have been the time to short it, because then you see the drop down. Okay, I'm going to show a couple more examples. We're going to go to Brazil. Alright, this is the Brazilian stock market. Alright, after the massive drop in 2008 and 9, you have the bottom form, the second touch here, breaks it. This one, though, never really comes up and touches it, but you can see once it breaks it and that initial drive up, that's where you would short it. And like I said, this is why I don't like to short stuff, because you really never know what it's going to do. This one tried to retouch it again, but there's a stronger line coming from 2008 that kept it down and held that line ever since. Alright, we're going to go Australian market. We've got our lows put in. We hit it, we test it, we break it. Alright, see, this is why I don't really recommend shorting. This one broke, boom. I wouldn't have touched that because I would have missed a huge opportunity, but I would have been waiting for that bounce up to hit in. It just never happens. So, I mean, that's a chance you take, and you don't need to act on every single move, because not every single move is going to come through. This one right here, depends how you draw it. Initial shoot up in 2009. You've got your initial touch, your hit, your break, comes up and skirts it. You could have shorted it here. You would have made some money, but if you held on to it too long, you would have lost it. So again, another reason why I'm not a fan of shorting. If you drew your line this way, and you saw this, because this is a continuation of this same bull market, this is simply a correction right here, you would have had the break, it would have come up and tested it, and again, you wouldn't have made any money because it keeps going. So that's why I don't really like to short. Alright, let's look at the Australian currency. Alright. And this really depends on where you draw your lines from. Usually you draw it from the bottom. So here, if you miss it and you don't draw it from the bottom, you mess up your lines, you'll see that there's no position to short here. And because you got to be real careful about where you draw your lines, you have to start at the bottom. If you start here, you'd see this, it wouldn't line up. So if you start at the bottom, hits twice in the beginning, breaks the downtrend, wait till it comes up. This is where you would have shorted it, that retest of the level, and once it's there, it's all the way down. Well, that's just some general idea on that. I don't recommend it. I don't like to do it, but if that's what you want to do, that's how I would do it. Okay, there's something else I want to talk about yesterday with how to play gold. I showed you the JNUG. This, I don't recommend using this unless you watch all the time what you're doing, because this is a derivative. This isn't actually a stock. If this can turn on a dime, it has 30% swings day in and day out. You really got to be on top of it to play this. Right now, I'm under 10 on 2 of my purchases. I'm already up, over 5%. But that doesn't mean that it'll then drop down to $7.50 or even $5, which I actually hope it does, because then I'm going to get it really cheap and I'm hopefully make a lot of money off that. But this is something that you have to be on top of it to watch, because the swings are just astronomical. I mean, we're going from 20 to 30, that's a 50% increase. From 30 to 15, that's a 50% decrease. From 15 to 25, that's a 60% increase. From 25 to 10, it's a 60% decrease. So this is something you need to be really on top of. All right? If you're not, and you don't really know how to use these, use the GDX, which is a ETF, a basket of miners, or just simply buy the GLD, which is gold, moves a lot slower, or the SLV, which is silver, which also moves a lot slower. So only use that JNUG if you're experienced using derivatives, okay? This thing will wipe you out quick. I know I bought down here because the strength hit 30. I bought at about $16. Okay? It shot up. I was immediately up like 60%, and I was jumping for joy. But then it failed this level, and it shot back down on me, and I'm barely making anything. Alright? And if I wasn't on top of it, I would have lost a ton of money. Okay? So that's why I don't really recommend using that unless you're really on top of it. You're checking it every half hour, and you really know how to use those. Okay? Some of the other stuff I want to bring to people's attention, as long as we're here and I'm just redoing this video, is the Brazilian market. The Brazilian market is in a real nice uptrend. It has been since the beginning of the year, just like gold, but unlike gold, it hasn't broken through. It's following this uptrend. But this isn't a confirmation that this is a buy, because like I explained earlier, we have a downtrend starting in 2008, hit off it again in 2011, off it again in 2014, and we're approaching that. So I suspect we're going to see it bounce back and forth and wind up in here, and it's going to either break up or break down. If it breaks up, this is definitely a buy. If it breaks down, I wouldn't touch it. So that's the Brazil market. Let's look at the Australian currency. So this is buying the Australian dollar versus the US dollar. A lot of people are seeing weakness in the US dollar. I'm seeing it, but I don't know if it's exactly going to play out the way a lot of people think. But as you can see, look, Australian dollar has a down currency since downtrend since 2013. It's bounced off it a couple times. Looks like it might have bottomed back here in early this year, and we're in that funnel. All right, we're in that funnel. So it's not a buy until it breaks out of this funnel. If it does break out, it's definitely a buy. I would recommend picking it up. All right, let's look at the Australian market, which is actually a really good learning tool. Let's pull it up. EWA, the Australian market. Okay, Australian market's a really good learning tool because it shows us a lot of stuff. Look, the Australian market didn't break down, didn't come up and retest this, but this is a perfect example of when you sell. This is called a head and shoulders formation. Let me one in. Head and shoulders. First shoulder, head, second shoulder. Once it retests, let me go to support line. Where are we? There we go. Support line. Once it hits and breaks here, you see how it keeps hitting here? Once it breaks here, boom, it's done. It's when you ditch it. Okay, that's a head and shoulders. That's a very bearish formation. Alright, now we come to present day. We have a reverse head and shoulders. This is the shoulder, head, second shoulder, okay? So now this is a very bullish formation. As you can see, we've bounced, we broke the downtrend. This is going up. The only thing that's keeping this down is the fact that the Australian dollar is in a funnel. So when the Australian dollar, if the Australian dollar breaks north at the end of that funnel, this is a definite buy. I would pick it up as soon as it entered the 30 on the RSI. As soon as it bounced off that, this is going to be a huge buy. That's pretty much it. Alright, so I just wanted to clear up some of those stuff. Like I said, the most important part of this video is if you're going to short, do it smartly. I wouldn't recommend it. I don't do it. But if you play the gold, don't play JNUG unless you have time to watch it every day and know exactly what you're doing.